Real estate agents, are you losing deals because you have the wrong lender? Well, that's a really big deal, and you got to think about that because not all lenders are created equal. You're talking about time, energy, money, and your reputation are all at stake, and you can pay big time in that arena if you don't have the right lender. If you've ever dealt with low response times, frustrated clients, people not getting through to the finish line, then you know how important it is. So in this video, I'm going to break down the 5 biggest things to avoid, the 5 biggest red flags to look for when thinking about using a lender partner, because a lot of your effort can be completely wasted by having the wrong lender partner. Let's jump right in. All right, so before we jump in, make sure that you subscribe to the channel. I'm Isaac Guzman with Real Estate CEOs, and I'm always here giving you the best, most relevant information on all things real estate. So subscribe to the channel, hit that bell. That way you're notified every time we come out with a new video. In addition to that, make sure that you drop a comment. What does your lender do that you love or that you wish they did better? And in addition to that, give me any other ideas. Maybe I missed a red flag. Give me an experience so that way we can all learn together. Lastly, at the end of this video, I'll give you an opportunity to join our free community called Agent War Room. So let's jump right in for red flag number 1 to look out for. All right, so red flag number 1, slow or unresponsive communication. Speed to lead is important, and it doesn't matter if it's an online lead or your best friend that you're helping out. If your lender isn't responsive, isn't jumping on the ball, isn't able to reach out to people right away, at least send the customary text message of, hey, I'm in a meeting right now, but I'm going to reach out to you as soon as I'm out, then you already know that this person is not going to have a good turnaround time. And that, again, can affect your client's actual ability to move forward on a property. Let's be real. We wish that every single person was pre-approved months in advance or weeks in advance, or walking around ready to go and ready to write offers that were clean and you had everything you needed. But that's not reality. And so what happens is sometimes you get a call on a Thursday, you're looking at a property on a Friday, and you're ready to write an offer Friday night or Saturday morning, right? Is your lender responsive? Are they able to gather docs quickly? Do they have a system to be able to help push that and move that forward and go at the speed that your client and you might want to go? Well, if they don't have that ability, that's a red flag. That's number 1, because speed to lead is important. And again, it doesn't matter if it's an online lead or your best friend. That is how you need to show up every single time, or at least your lender needs to show up that way every single time. If it's important to you that you actually convert and you don't put people in these weird positions, then you got to get a lender that's responsive. Red flag number 2, limited options or very rigid guidelines. So remember, lenders have access to different products, right? They might work in retail or they might be in the broker space. And so what happens is they have access to different products. There might be some really great stuff that they have access to for first-time home buyers or down payment assistant where somebody else might not. And so there's 2 really critical things. A lot of people will just tell you, oh, go with brokers because they have the most options. That's not necessarily true. I mean, the mortgage team that I work with, they're brokers, and it's for a reason, though. It's because my clientele, as a matter of fact, they end up having a broad range of needs. We work with people on the low end, the high end, and everything in between. There's a lot of VA that we do, right? There's a lot of investment stuff that we work with. And so we need somebody who's going to be able to have access to all kinds of different products at any given time. Now, that might not be true of your business. Let's say, for example, you work in a higher end market, and that's typically what you work with is really highly qualified people that have great down payments, great credit scores, things like that. Well, you might only need a few products, right? You might go to Bank of America because they have an amazing jumbo product that really works for the vast majority of your clients. So keep in mind that 1, you want flexibility and you want a large array of options from your lender. In the unique cases where you are very niche down in your business, that might not actually be necessary. Let's say all you sell is equestrian property out in rural areas. Maybe you just work with one bank that really focuses on that. But for the vast majority of people, having a lot of options is going to be much more helpful because you can help more clients. So make sure that their guidelines aren't too rigid or that they don't have too few options and they're always having to get shopped around because whatever rate they come up with is obscenely higher than somebody else because they don't really specialize in that product. So you want to make sure that you have somebody that you can refer the majority of your clients to and know that they're going to have a product for them that fits. Make sense? All right, number 3 is a big one. And it's lack of transparency and poor client education. Now imagine this. Your client isn't always getting all of the information from every lender. Some people, whether it's on purpose or just out of neglect, fail to educate people properly on their options, what it's actually going to look like when they're making the purchase. There's a lot of different things that can go into that. And if your lender's not being extremely transparent, maybe they rush through the process without educating people. That can turn around and bite you in the butt, because a lot of times people, if they get caught off guard by something you do, but especially your lender, people get really nervous about what's going on here. Hey, this seems a little fishy. This might seem like a scam. Maybe I can go and figure it out someone else. And if they lose trust in your lender and you recommended that person, right, and you work with this person frequently, maybe you guys worked the open house together where you met this client, and if they lose trust in them, you're next. It's pretty much guaranteed that if they think the lender's up to no good, that's going to then bleed into what they think about you. So make sure that you have a lender who actually educates the client, walks them through, slows things down for them, and takes the time to explain every step of the process and what exactly is happening and what's going on their loan and what other options they have available. A lot of times, now there's one caveat. Don't have a lender who just gives them all the options, gives them, hey, here's 16 different programs that you can choose from, and here's all the minutia. A good lender is actually going to slow down, figure out their situation, and go, here's 2 to 3 options that might make the most sense. Let me explain each one of them and why one works better in some situation than the other.